Everybody? It's the Digital World Podcast, and I'm going to do an interesting video on charts today. I'm going to use a lot of blockchain backer because it goes back to a lot of what I've been talking about current events. And I think this is the video you want to watch if you want to know what's coming in the next couple months to, I wouldn't even say year, but it's definitely in the next couple months, I believe. Now, blockchain backer made an interesting point. Um, the Fed's Kaplan and Rosengren are going to sell all their stocks amid ethics concerns. And when's the last time one of these people had ethics concerns? There's no ethics. And what they're doing now is unethical. And you'll see why. And he pointed out that the S&P 500 hit a 4.236 Fibonacci extension last week based on the peak and bottom of the great financial crisis. And that just this time of hitting a perfect extension, those Federal Reserve presidents are selling all their stocks amid ethical concerns. Go figure. Then he's showing here from the top of the before the great financial crisis to the bottom, the peak. If you do the Fibonacci extension on that, right there, right when they're selling all their stocks due to ethical concerns, they just happen to nail it right at the 4.236 extension. That is very interesting. Now I'm going to show you a clip or a few clips of his video. And if you haven't watched it, go watch this. This one is super good. And he provides very valuable data that you can't get anywhere else. And he's a great follow. Subscribe to his channel. He does a great job. And he's going to go ahead and explain the chart.
One of the things that's very interesting is if we take a look at the S&P 500.
Let me see. Let me get this back to one speed. There you go. Okay, here we go.
And I've got the SPX pulled up right here in front of us. We can see that over the course of the last week or two, the SPX or the S&P 500 has reached a full 4.236 extension based on the peak and trough of the great financial crisis. And that over the course of the last week, we have now hit the 4.236 extension for the S&P 500. Interestingly enough, last night, the Fed presidents Kaplan and Rosengren to sell individual stock holdings to address ethics concerns. So we have Fed presidents who are now coming out saying, hey, you know what? There seems to be some concern over the ethics of us holding stocks. So we're going to go ahead and sell all of our stocks right now at the 4.236 extension for the S&P 500. Man, isn't it so nice of them to just have finally come to ethics? They finally have some ethics over there at the Federal Reserve, and they're going to sell it so that they're not biased in their monetary approach. That's interesting. The Federal Reserve presidents are finally going to be ethical, and they're going to sell all of their stocks at the 4.236 extension. Federal Reserve regional presidents Robert Kaplan and Eric Rosengren said Thursday they will sell individual stock holdings amid ethics concerns regarding trading in 2020. The Fed officials will sell all their stocks by September 30th and put the proceeds in passive investments, they said in a statement released Thursday. That's a pretty interesting thing to happen right here. For me as a chartist, for me who's always...
Okay, September 30th. Okay. They're going to sell all their stocks. Folks, you got to pay attention to these moves. This is reaching a full extension. There's going to be a drawback. Okay? And I'm going to show you something else he pointed out from the Dow Jones, because everything is lining up. Usually when crypto goes up, the stock market goes down. Now we see that the S&P has reached its extension, and all these Fed presidents all of a sudden, hey, I'm going to sell all of my stocks. Not some, not most, but all of my stock. And they're going to do it all the way through September 30th due to ethical concerns. Go figure. Okay, now the Dow Jones, when I saw this, I was shocked, just given the, piecing together the charts as well as the news that I've been presenting to you guys. It just makes it all the more clear about what's actually happening, and it gives you more validation on the research. And that's why I'm presenting this information to you, so you can get value out of it, because I don't want to waste your time. It's an urgent crisis that's at hand, and I want you guys to be aware. So here, check this out.
In here, right? Here's your double tap for the Dow Jones. Here's your double tap for the Ethereum price chart. And then here is your pullback into that bull flag. Here is your pullback into that bull flag. And then here we are. We're up in this moment at this point right now for the Dow Jones. So at what point does that top actually come in for the Dow Jones? Either way, it should be scary when looking at it from a long-term perspective, because what ended up happening over the course of the long term, big, huge, long bear market. And what's really interesting about the Dow Jones Industrial Average is the setup is very similar to what the setup was like prior to the Great Depression setting in that the structural setup prior to going on the big run that led up to the top that ended up leading into the big massive crash, very similar to what we're seeing right now. However, if we look at how big the rise was, so this would have been like a great financial crisis here back in 1920 to 1922, 21, the price rose 505% off the lows. Have we gotten that high yet for the Dow Jones? Not quite, but boy, sure close, right? If the Dow were to repeat what happened back and then, that top for the Dow would be somewhere around $39,000. But you can see all those similarities of big time frame setups like I just showed you over there in Ethereum. You've already had your double tap back test into the bull flag right back in here, and it's on its final wave from a structural setup for the Dow Jones. So for me, thinking about, all right, if this thing's on the brink of something pretty crazy, I'm going to want some cash at some point, right? So looking at the SPX hitting the 4.236 extension, looking at the structural setup of the Dow Jones Industrial Average and how it compares to what happened prior to the Great Depression, a mere couple of percentage points below the same extension from back then. So that if you were to get up there, there's only 12% more left in the Dow Jones. The thing's risen over 450% over the course of the last 11 years, only 12% remaining in the Dow Jones. If it repeats that, right, we don't know if it will, but if it did, and that would show that if it does repeat that, there's one final little excessive move left in the Dow Jones, right? Little 12% rise up there in the Dow, which you can kind of see happen back in here, right? This final little move right in here, about 20%, right? Where would 12% be? 12% would put you in a route right there. So is that where we are? I don't know, but I know this setup is the exact same as Ethereum of what we just looked at. And I know that some Federal Reserve presidents just came out and said for ethical reasons, they're going to sell.
Okay, so now that I've provided you, you know, evidence using blockchain backers data analysis. Now, there could be other charters out there, and I'm not saying that his is always right, but I have been following him, and everything that I've been seeing with news and the research that I've been putting out to you guys aligns with the charts, and I've been saying we're gonna head for some rough times. So a financial plan is essential. It's very, very essential. If you have a opportunity to take profits, take profits. We're headed towards some very turbulent times. Inflation, the prices of things are going up. People, and I'm presenting this information because I know you guys are smart and you guys are hungry to learn. And we're getting towards a period where, we have the White House saying, oh, if you take the beef, poultry, cheese, all these other things away from, away from the prices that they're calculating, then inflation isn't so bad. Well, yeah, of course, if you take these things that have gone up way up in price, of course it's not going to be so bad. So it just, you got to pay attention to that. And also another case in point was Ben Bernanke. I was watching the Economic Ninja talking about this, and he was saying how Ben Bernanke was saying that, oh, there's no way that mortgage-backed securities could all come down at once. It's gonna happen in this area and that area, but not all at once. And obviously, he was wrong. And right now, what are we hearing from the Fed, from the White House? Oh, inflation's not gonna be that bad. You're just gonna see it here and there. It's gonna be fine. Okay, you gotta learn lessons from history and apply those. If we forget history, we're bound to repeat the same mistakes. Okay, and that's why I'm presenting this information. I want to get you guys prepared. I want you guys to be aware of everything that's happening, because it's coming, and it's coming soon, and it's coming hard. And you guys are smart enough, and you're here, you're learning as I am learning too. And I'm piecing this information together, and I'm providing it to you guys in an easy to understand way, I hope. And I want to provide you value, not waste your time, because this is important. This is information people need to know. I hope this episode has brought you some value. Like and subscribe. Please share this video. Get it out to people. Let them also be aware of what's happening, because this is really important times that we're living in. This is the Digital World Podcast, and I'll see you in the next episode.